Thank you for joining us on the road to retirement with SamCERA. My name is Saledonia Amaker, and I will be presenting first, followed by Julianne Nagal. We will be going over lots of information with you today, including member statements, retirement contribution, and service credit purchases. In addition to that, we will be showing you how your benefits is calculated and what to do if you have a divorce or disability.
What you see before you, it's a member statement. You can generate a member statement at any time via the online SamCERA self-service portal or by contacting SamCERA to request one. The statement is a summary of your SamCERA retirement account as of the current date. This grid here in the middle, it's a breakdown of the funds in your account. It shows the balance of what was in your account 1 year ago and all the additional contribution and interest in the past year. The bottom right figure is the total that you currently have in your account. Below the grid shows you your current age, retirement plan you are in, total years of service credit, and the maximum annual cost of living adjustment that you will be entitled to once you retire. Now, the cost of living adjustment, it is not guaranteed. However, your pension is guaranteed. The right side shows the current beneficiary that you have on file with SamCERA. For those that are eligible to retire, the statement also contains a simple estimate to show what your retirement benefit would be had you retired as of the current date. If you feel any of this information is incorrect, please contact our office so that we may look into the matter. Before I move on the next slide, please note this row labeled members' contributions. Your contributions, members' contributions refer to the money that you have contributed to your SamCERA account. Contributions are mandatory and they are deducted from your biweekly paycheck. The rate or percentage that is deducted every 2 weeks depends on the retirement plan that you're in. For plan 1 through 6, it also depends on your entry age. For plan 7, it is a flat rate, regardless of your age. Keep in mind that the rates are subject to change each year. Your SamCERA account is credited with interest twice a year at the end of June and at the end of December. You cannot borrow from your account or withdraw any of your funds while you are still an employee. Now you may be wondering, doesn't my employer contribute at all? Your employer actually does contribute to fund your retirement, but the money they pay goes into a separate account called the employer account. You cannot see or withdraw any funds from the employer account because it's like a community pot that there are to pay for your lifetime monthly benefit as well as other members. Keep your beneficiary current. Complete the beneficiary designation form to name who you want to receive the money in your account in the event you pass away. We ask that you please keep your beneficiary information up to date with SamCERA. SamCERA is a separate entity from Human Resources, which means when you need to update your beneficiary, you need to do so with each of our offices. At SamCERA, you can name a single person, multiple people, or even a trust or charity as a beneficiary. You can also change your beneficiary at any time by completing the beneficiary designation form. The form is available on our website at www.samcera.org for download. Please keep in mind that the beneficiary you name will be entitled to your account balance if you were to pass away before retirement. At the time of retirement, you will also be asked to designate a beneficiary as well. What if you had a divorce? There are 5 things you need to know about divorce and your SamCERA. Your retirement account is community property for those members who are married or in a registered domestic partnership. Updating your beneficiary information is something you probably would want to do if you had a divorce. In the state of California, retirement assets are considered community property when you are married or registered with the state as domestic partner. This means if you get divorced or become legally separated, your former spouse or domestic partner has a right to 50% of the contribution, interest, and service credit. And this will start from your marriage to date of separation. Let's say, for example, that you were married prior to starting your employment, and at the end of your 8th year of employment, you get a divorce. Your spouse now has a right to half of your account balance and 4 years of your service credit. So you do lose service credit and money. Because community property, you must join SamCERA in your dissolution proceedings. To help our members, SamCERA does have model orders on our website you can use to split your account. Know that your refund, request, or retirement pension will not be paid until the divorce has been cleared by our legal department. Don't wait until you are ready to retire. Avoid the potential delay in payment. Supply all the proper documentation as soon as possible. If you have any more questions, you can always call our office. Now, if your retirement account was split due to divorce, and if your former spouse withdraw the contribution and interest, you could redeposit those funds and restore your service credit. However, there's criteria to that. And now we're going into service credit purchase. On these next few slides, I will be going over some of the options for service credit purchases, upgrade, and redeposits that you can do while you're an active employee. There's a service purchase request form on our website that you will need to complete and submit to SamCERA if you are interested in doing any of the purchase I'm going to go over. Service credit purchase. So let's start with extra help. The first and probably the most common one is the purchase of extra help hours. Some members start their career as an extra help employee before becoming a member of SamCERA. Extra help employees are not member of SamCERA. This means that extra help hours are not part of the service credit, but they can be if you purchase them. You would have to pay for the contribution that you would have made or that you should have paid as a member, plus all the interest before contributions would have earned through the years. Redeposit, as I mentioned before, if your former spouse withdraw the funds awarded to them through the divorce, you can redeposit those funds to restore your service credit. The other redeposit is only for those members who were a member of SamCERA but withdraw their funds. For these members, you can redeposit previously withdrawn funds plus interest, and that will restore the service credit associated with that previous membership. Upgrade. Members who were in Retirement Plan 3 but are now in a contributory plan have the option to upgrade their Plan 3 time to the contributory plan. You would have to pay the contribution you would have contributed plus the interest those contributions would have earned in addition to what the county would have contributed and the interest that the money would have earned. And now let's move to the next ones. Medical leave. If you fell into a leave without pay status due to your illness or a family member illness, you may be eligible to purchase that time. You would have to pay the contribution you would have made and any interest that the money would have earned. Military leave. Members may be eligible to purchase military leave. Please call SamCERA for more information about military leave. Parental leave. Members who fall into leave without pay status due to parental leave may be eligible to purchase that time. This only pertains to those that commenced on after March 23rd, 2021, and you must have returned to active employment for at least the same period of time as the leave. You would have to pay for the contributions you would have contributed plus the interest those contributions would have earned in addition to what the employer would have contributed and the interest the money would have earned. Purchase can be paid in various ways depending on the purchase type. The cost and payment option will be provided to you after you submit the request form. If you enter into payment plan, but then separate from your employment before finishing, you will have 128 days to pay to complete the purchase. If you leave employment, and you are not retiring, our office will send you a disposition packet asking what you would like to do with your funds. One of the options is to withdraw your contributions and interest. If you choose to withdraw, you can either roll over the funds to another pre-tax retirement account or receive the funds directly minus taxes. If you don't want to withdraw your funds, you can leave the funds on deposit and go into what we call deferred status. You can later choose to withdraw or retire when you're eligible. And now, reciprocity. For members who leave employment and leave their funds on deposit, if they become a member of another California public retirement system, within 6 months, they could establish what we call reciprocity. Reciprocity is basically linking up your SamCERA retirement account with your new retirement account. No funds are transferred. However, certain information is shared between the two systems that may benefit you. An example of this could be
lower contribution rate.
you must request reciprocity at each system, and when you are ready to retire, you must retire from both systems on the same date. Please note that reciprocity is irrevocable. For more details, please see our reciprocity guide that can be found on our website or call our office. Thank you, and this is the end of my presentation, and now I will hand it over to Julianne Nagal.
Hi, everyone. This is Julianne. I will be going over the rest of this presentation. Now, before you can start planning for your retirement, you need to know when you are eligible. Here are the eligibility requirements for our general members and our safety and probation members. If you do not know what retirement plan you are in, you can find it on your member statement under the Your Member Data section. For our general members, those of you in plans 1 through 6, you must be at least age 50 with at least 10 years of service. If you have 30 or more years of service, you can retire regardless of your age. For those in Plan 3, you must be at least age 55 with 10 years of service. For those of you that have multiple plans that include Plan 3, for example, Plan 2 with Plan 3 or Plan 3 with Plan 4, please contact our office for questions regarding your eligibility. For those in Plan 7, you must be at least age 52 with at least 5 years of service. For our safety and probation members, those of you in plans 1 through 6, you must be at least age 50 with at least 10 years of service. If you have 20 or more years of service, you can retire regardless of your age. For those in Plan 7, you must be age 50 with at least 5 years of service. For those that work part-time in plans 1 through 6, you must be at least age 55 with at least 5 years of service credit and at least 10 years of county employment. For those that are 70 or older, you can retire regardless of your years of service. However, this is not applicable for those in Plan 3. Calculating your retirement. Many of you see on your biweekly paychecks that retirement contributions are automatically deducted. These contributions go into your SamCERA account. However, the balance in your SamCERA account does not determine how much your monthly retirement pension will be in the future. Your lifetime monthly benefit is determined by a defined benefit formula. This formula has 3 variables: your final average monthly salary, your years of service credit, multiplied by your retirement age factor. We will go into more detail about each part of the formula in the next few slides. Final average compensation. Depending on what plan you are in, we will use either your highest 1-year salary or your highest 3-year salary to find your final average compensation, or what we call FAC for short. The FAC is not based on a calendar year. We take a sum of your pensionable salary for 1 year or 3 years and then divide that total by either 12 months or 36 months. For example, a General Plan 2 member has their highest 1-year salary from February 2019 to January of 2020. We would divide that total by 12 months to get that member's FAC. For most of our members, the FAC tends to be the highest 1-year salary or highest 3-year salary toward the end of their career, because the trend is your normal salary is higher at that point. However, some members may have worked out of class for a length of time, and that salary may be higher than their normal salary. That could potentially be your FAC period. We go through your whole pay history to find your highest FAC when we are auditing your file to calculate your retirement benefit. There are certain pay codes that count toward your FAC and others that do not. Overtime is an example of a pay code that does not count toward your FAC. Terminal pay, which is paid by the county for your unused vacation, holiday comp, and comp time hours when you retire, is also not counted toward your FAC. Service credit. The maximum service credit hours you can earn each biweekly pay period is 80 hours. The maximum service credit hours you can earn in 1 calendar year is 2,080 hours. Not all types of hours are included. Examples of time not counted towards service credit are overtime hours and the extra 4 hours some safety members work on an 84-12 schedule each pay period. For those safety members on the 84-12 schedule, even though the extra 4 hours do not count toward your service credit, the pay you earn during those 4 extra hours does count toward your FAC. The hours that do count toward your service credit are for pay codes that we call retirement compensable. Examples of retirement compensable pay codes are regular hours worked at pay code 001 and vacation, sick, or comp time hours you use during a pay period. For those of you who participate in the county's VTO program, your service credit is not affected. However, your FAC may be affected because your salary is reduced by a certain percentage based on your VTO usage. Please note that your years of service with SamCERA may not be the same as your years of service with the county. Some discrepancies between the two may be due to, for example, if you worked part-time or took any leave of absence without pay. Another example is your date of employment with the county may be different from your date of membership with SamCERA if you worked for extra help before becoming a permanent employee. If you have incoming reciprocity from another public agency, those years of service are not used to compute your SamCERA benefit. However, they do count towards helping you reach eligibility. Age factor. Your age factor slightly increases with every quarter age based on your date of birth. In this chart, you will see what the maximum age factor is for each retirement plan. So if you run your estimates on our member self-service portal called MySamCERA, you'll notice that your pension benefit will not increase that much between a retirement date this month versus next month. But you could see a more substantial increase for a retirement date maybe 6 months to a year from now, and also further into the future. Basically, the rule of thumb is the longer you work, the greater your monthly retirement benefit will be, because you are trying to maximize these three variables of the defined benefit formula. Retirement estimates. You can run your own retirement estimates on MySamCERA.org if you have an account already set up. Once you are logged into your MySamCERA account, click on the My Retirement Estimates tab in your home page. To start running an estimate, click on the New Estimate button. You will follow the steps in the Retirement Estimator wizard to calculate your estimate. Through each step of the estimator, there is a side panel with useful instructions on how to fill out each step. Once you reach the final step, you can click the View Estimate button at the bottom of the estimator to see the PDF version in a pop-up window. If you want to save the estimate to view in your MySamCERA account later, then click the Save button. Your estimate will look something like this. By default, the estimator will use your FAC based on your payroll history we have as of the most recent pay period imported from the county's Workday system into our pension system. If you have future raises, for example, from an MOU agreement, and you would like to include those in your estimate, there is a section in the retirement estimator where you can project that. If what you want to project is more complicated, then you can contact our office for assistance. Please remember that these are just estimates to help with your future planning. Nothing is final until you retire, and we audit your account to determine your monthly benefit. Disability retirement is for those who unfortunately cannot work until they reach regular service retirement eligibility. There are two types of disability retirement. There is non-service connected, which is permanent incapacity not caused by work. And the other is service connected, which is permanent incapacity caused by work. In some cases, disability retirement can pay more, or it could even pay less than a regular service retirement. What happens if you pass away before retirement? If you died during active membership, your surviving beneficiary or beneficiaries may be eligible for different benefits from SamCERA, depending on your years of service and how you passed away. Survivor benefits can range from a one-time lump sum to a monthly continuance. As mentioned earlier in our presentation, it is very important to keep your beneficiary designation current while you are working and not yet retired. There are life-changing events like marriage, children, divorce, and death that can have an impact on who you want to name as your beneficiary or beneficiaries. Please also note that if you change your beneficiaries with the Benefits Division of Human Resources for medical benefit purposes, those changes do not transfer over to SamCERA. You will need to fill out a beneficiary designation form and submit it to SamCERA. On our website at www.samcera.org, in the news section, is a MySamCERA quick reference guide. The first page of the guide is instructions on how to create your account if you do not have one already. When creating your account, you will need to use your computer for all the steps. Once your account is created, You can log into MySamCERA via your computer or via the mobile app to access your homepage. Page 2 of the quick reference guide also shows you how to navigate around your MySamCERA portal. Our benefits team can assist you with any questions you have regarding your SamCERA benefits via email at samcera@samcera.org or by phone at 650-599-1234. And it's always a good idea to stay connected with SamCERA. You can visit our website at, again, www.samcera.org for any important updates, member guides, forms, and a lot of other useful information. You can also use your MySamCERA portal on your computer or mobile app to calculate benefit estimates, get member statements, check your beneficiary information, and more. Again, you can also contact us by phone or by email. We hope the information in this presentation helps in your journey toward the road to retirement.